Hey guys, welcome to another video on basic investment terms. Today we're going to be taking a look at mutual funds. Now, what is a mutual fund? All a mutual fund is, it's an aggregation of different companies into a single entity. Now, companies represented into a mutual fund usually revolve around a common theme, such as healthcare, biotech, utility, mining, gas and oil, you name it. There's usually one or more mutual funds to represent a certain sector, and more specifically, a certain sector within a certain market, such as Canadian, American, European, Asian, etc., etc. All right, there are hundreds of mutual funds out there to represent each specific market and industry. Now, it's sort of like a fruit basket with a variety of fruit into it. Instead of going out to the store and handpicking every single one of your apples, of your oranges, of your bananas, and putting them into a basket yourself, you're just saying, you know what, I'm going to go out and buy a basket that's already been made, already been handpicked. The fruit in the basket have already been handpicked by an expert in the field, and I trust that expert to handpick the best bananas, the best apples, and the best oranges to represent what I'm looking for and to make my basket for me. All right. Now I'm going to pay a premium for that pre-made basket, but I'm hoping the quality in it's going to be good and it's going to represent what I'm looking for. Okay. So what are the advantages of a mutual fund? Well, like I said, you get that professional management. There's a specific and professional fund manager that's going to be handpicking the stocks in which he's going to invest your money, and he's going to be reallocating that money based on the investments in that stock and their performance. Okay, so that is an advantage and that is a disadvantage in the sense that you're going to have to pay a premium. If you want someone to actively manage your money and your funds, you're going to have to pay a premium, usually based on a percentage that you pay yearly, usually 1, 2, or 3%, somewhere around there. Some of the mutual funds have a lower fee, some of them have a higher fee, and they're known as MER, management expense ratios. Okay, so with that professional management comes advantages, but also disadvantages in the form of fees. And another advantage of mutual funds is the diversification that you get. For a small amount of money, you can buy mutual funds and have exposure to hundreds of different companies within that mutual fund without having to buy, 1, 2, or 3 stocks of each specific company within that fund if you wanted to have that exposure that you have in that mutual fund. Okay, so you get a lot more diversification, a lot more exposure for less amount of money. Now, that can also come as a disadvantage because some mutual funds are so large and are so wealthy, they have such a big amount of money that they're so diversified, they're invested into hundreds and hundreds of different companies. And you can just imagine yourself if you have 100 different companies and 50 companies do well in a single year, but 50 other companies don't do well in that same year, you can't imagine that mutual fund will be going very, very high or very low. It won't be moving a lot. It's sort of like if one of the stocks perform exceptionally well, it's being diluted by the underperformance of all the other stocks that aren't performing as well in the mutual fund. Okay, so diversification is a good thing. Too much diversification leads to what we call dilution. All right, the performance of the good stocks is being diluted by the performance of the bad stocks. All right, now another advantage of the mutual fund is the simplicity itself. You buy into the mutual fund, someone does the management for you. He reallocates the money based on the stock's performances. Like I said, if 50 stocks perform well, he might want to, the year after, he might want to put more of the proportion of his money into the stocks that perform well and allocate less amounts of money into the stocks that don't perform well. So he's doing that micromanagement for you. You don't have to touch anything. You just put the money in there, you go to bed, Everything is being done for you. You don't even have to touch anything. So the simplicity itself is quite attractive to many investors that have a more passive approach. But investors that like to micromanage, that like to do some cherry picking when it comes to stock picking, they're not big fans of mutual funds, especially if you say, well, I'm going to manage it for you. It's not necessarily going to be managed like you would want it to be managed, and we're going to be charging you a fee to do so. So it really depends on what kind of investor you are and how much time you want to be spending on choosing your own individual stocks and how much money you have available to do so. All right. So mutual funds can be a very good thing, and they can be not such a good thing depending on what kind of investor you are, again, guys. So I'm going to leave this video here. I hope you guys enjoyed this video. I hope it clears a little bit of the things up surrounding the mutual funds. If you want to do some more research, I highly suggest you look it up on either Investopedia or different types of website that can define certain terms for you. If you have any questions, definitely talk to your broker, talk to your online brokerage platform or bank if you have any questions concerning their mutual funds. So guys, if you like this video, don't forget to give me a thumbs up. Don't forget to subscribe down below. Leave a comment if you have anything you want me to improve, or if you have anything you would like me to talk about in another upcoming video. Definitely don't forget to check out my Twitter account if you guys want to be updated as soon as another video comes out. Thanks guys, have a good one.